Good morning. Look at this stock, still going up. And it probably, I'm just going to go to the whole number to go to 120. Why stop here? But look at that, the 60-minute trend here from 72-ish where it got started, 75. And I mean, just a nice controlled uptrend. It never began to accelerate where it's looks overheated. So there's no doubt that, for over here to here, it got a bit extended, but then this pullback, and then from here to here, the way it went up, you could say it's extended and it's just continuing to go. And maybe today it continues to where, you can consider fading it, but nowhere along the way, looking at this 60-minute chart, did it really give any indication that it was cooked and ready and, going to pull back heavily. So I saw it in the list over here and I said, really? Up another 9 and change, and looking at the chart, I was like, gaps and goes, but geez, I would just not do anything to fade something like this. And why not just go with, especially intraday? Good morning, Alejandro. So anyway, we don't fade things just because it looks like it's gone too far. That's for sure. All right. So markets, it looks like, we discussed yesterday that today should be the day. That these markets should be done with their back and forth. Yesterday, it backed off and looked like maybe it was going to go back and maybe test that low down there, and it didn't, and buyers stepped up again. And we're up here this morning, and it looks like it should continue to go up. And that is the bias, that regardless, well, I shouldn't say regardless, it depends on how far it pulls back, but we can assess that just by looking at the daily chart, as explained yesterday. If it goes more than 50% retracement into the prior day's range, it becomes questionable. And of course, you have to take into consideration the size of the prior day's range, meaning if it's a narrow range day, it's not going to take very much to retrace. And then, does it trade below the prior day's low? But as the range begins to expand, like this bottoming tail bar, the prior day, well, you say if it went more than 50%, and that's what we had this line, if it went more than 50%, well, it becomes questionable whether it's going to recover. It hasn't failed yet because it hasn't traded below a prior day's low, and ultimately, during a trend, it's the reference point of major support. So just to back up a little bit, what does that actually mean? When we get into trend analysis, well, the prior major support was down here as it relates to these futures charts, and minor support was here. So the retracement to minor support was exactly what it should do and begin to hold, and it did. And this bar caused the gyrations, and then it came back. Well, this is where we said, okay, yesterday, as long as it doesn't retrace halfway, it looks okay. And looking from very short-term charts, whether it's a 2-minute or a 5-minute, yesterday, it looked like, oh my God, this is going to crater. But buyers stepped up again. And that's why you have to put it in perspective of the higher time frame and your bias. And then prices came back. And now we have a day that's beginning to move higher. That was our expectation yesterday. At the end of the day, that's happening. We do have this resistance area right here. So I think it probably stalls. So if we say, okay, if it can get to the top of this area, that gives us a reference point where there could be a stall here as prices are moving up right now. And we'll look at the spiders and we'll see how that looks from that point of view, because maybe not everybody has futures. And this is a 24-hour chart. And so that would be 25. 2909-ish or so, 2910, that congestion area right there. Let's look at the spiders as it relates to that. It should be around, I guess, 291-ish, right? 290.10. So if it comes up into there, there's a stall, and this was that hourly downtrend that was happening. And I look at this and say, well, it's not like a long consolidation. It's a swing high. And a lot of times they go right up into the top of the swing high. Now, ultimately, unless it breaks a prior day's low as a starting point, the assumption is it's going to go up above this high because it's in an uptrend. And that's simple trend following analysis that we do. Prior buyer's low, first reference point of support, swing low, ultimately major support. So we have a constant systematic form of analysis. What is my bias? What would change my bias? And what I'm explaining is, from the most, minor or micro level of on this time frame, a halfway retracement. If it's a narrow bar, the prior bar is low. Ultimately, the prior bar is low, would negate it. And then is there a minor swing low? Because this isn't major support unless it takes out the high, but it is a swing low, which could result in a W bottom. That's going to be part of our discussion tonight in the coaching session. And then if it breaks below here, we look to the major support level. And part of what we do, right, trend analysis, is what if this was to make a lower high and a lower low? That's still a buy setup because in a weekly time frame, it's this. It's going to be a buy within an uptrend. At some point, we'll look at that in another morning when it's appropriate, where we're seeing something like that, and we'll show it to you. And then you've got your major support down there. So it's a step-by-step systematic process, nothing to do with drawing trend lines, fib lines, moving average crossovers, or whatever, just based on price. And the great thing about it, it's black and white, and not everything in technical analysis is black and white, where it's just, this is the way it's done. There's no other interpretation of it. And, there's other things that are like, okay, this pattern, that pattern, how did it form, so on and so forth. But this is black and white when it comes to trend analysis, and that's what I really like about it. Okay. And Qs, not as pretty, but one of the things, you've been in here for a while, is that when we've seen corrections, right, minor corrections, of course, is that the laggard plays catch up. So this has been the laggard because the retracement was all the way down to major support. It couldn't stop at minor support. It went to major support. Buyer stepped up, and this is in part because of the internet stocks, Facebook, of course, Twitter got beat down. By the way, Snap today has a short sale restriction on it. So now you've got the exchange trying to protect it from short sales. So it's got to, they put the short sale restriction on it. Good morning, John. And actually, I see some firm upgraded it from a sell to a hold. We'll see what it does. It looks pretty awful, but it did gap down yesterday. That's Snap. So now the Qs here, you look at the hourly chart, and even though you can see the improving and the bottoming tail bar and yesterday's bottoming tail bar and so forth, today's green, it hasn't taken out the prior day's high. But you can see overall this looks like a basing kind of formation. And yesterday we had a little bit of a discussion, as I remember. Dan had brought up this nasty little break to the downside here after it moved up. And what I said was, this is normal because bottoming patterns do exactly this. And we've seen it an endless amount of times with daily charts that are bottoming out of downtrends. And we sell a put spread under here, when it looks great, because we're doing it as it pops up here, and we're saying, well, it shouldn't go back down here. Most of the time it doesn't, but they have these nasty pullbacks that look like they're going through it, and then buyers step up again. Right? This is not obviously an uptrend. So when something comes out of a base the first time, historically, that it's typical that when it looks like it's done, it comes back in again to shake, people out another time before it gets going. So this, if it can get through here, we should see the momentum begin to pick up in the Qs. So while the spiders are the better looking of the two, right, because of what I explained, the retracement, we also talked about angles of retracement yesterday. I talked about all the reasons why this was less desirable than the spiders were. But if this can get through this area here today, right, and even into tomorrow, we should see a pickup in momentum where this starts to move higher in relative ease. Because now it has proven itself by going through the bottoming process, by shaking out whoever might be shook out when it hit that resistance area. And now look at the way it's rising here in a more controlled fashion. The ranges have tightened up. I suspect it's going to get a little less controlled when it gets here at the open. So be aware of that. It did rally from this area to this area. So it's probably going to start whipping around a little bit as sellers come in and see if they can knock it back down. So we'll see how that plays out at the open. The Dow, which I remember looking at this on this day, and in the morning it was red, and thinking, wow, that doesn't look so good anymore. Bottoming tails, and this was that red bar. But at the end, it turned into a green bar. And now we've got yesterday's topping tail bar that's being ignored. And topping tails are supposed to be ignored in an uptrend like this, in this bullish consolidation. So this was a little shakeout. We've got bullish price action. And you say, well, what's so bullish about a topping tail? Well, not much, but nothing actually, because sellers took control when it got to resistance, but it's doing what it's supposed to do, meaning ignoring the topping tail versus it breaking down below here. So bar by bar analysis is confirming that buyers are still in control and stepping up. And while their confidence level isn't what it was here, that's what should begin to happen as this progresses, whether it's in the Qs or this, and the Dow eventually moving up to new all-time highs, the transports moving up to new all-time highs, which I think they're knocking on the door, or they're actually there, right? So now we need the Dow to follow up. And then what we're going to be looking for right now, the idiots, as I affectionately call them, the wrong way option traders. And this is the envelopes I was talking to you about yesterday. And I gave you the parameters for. I said this typically doesn't get down to 1.2. Sometimes it gets close and gets down there, or even under, a bigger correction, where things get more nasty, it will. But in a more bullish type of uptrend like this, these bands tend to catch the turn. So breadth has pushed down under minus 100. Sentiment pushed down to the upper band. I've got the two bands here, and then ultimately the 1.2. And this is just the day-to-day of that put-call ratio. So yesterday, the idiot said, hey, maybe this market's really going to go up. And maybe they're on the right side, or some of them are on the right side of it, the majority. And I don't know how many, I don't have the details of who's doing what or whatever. I just look at this in a very simple way, is that, hey, the moving average is down here, which means over the last several days, they've been betting that this market's going to go down. And when it reaches an extreme and breadth is here, the odds increase exponentially that it's not going down, and then it's going to go up. And that's what we're seeing now. So,
hey, Greg, let me ask you a question. Looking at the two observations, it seems like the run on the daily put call from the low to the high that rapidly is unusual. And then your moving average one, I understand how it works, of course, but that big run closing at the high didn't curl the moving average up very much at all. It made a curve, but it didn't move. So that kind of, I guess, supports that, yeah, there might be a few ones that got it right there.
Well, there had to be since it went up, but when it, moves rapidly like that, yesterday, we'd have to look at the intraday chart. It was relatively low, but a moving average being a moving average, it's dropping off old data.
Right, so right.
Prior up here, right, it's just beginning to drop that off. And where this is extreme, now it starts to curl and you'll need more days up here or even higher where this will start to move up again. So,
right. But it did move up rapidly in one day.
Yeah, it did. I don't read too much into that actually, Dan, other than this is where this is at. That's the primary focus, and where this closes day to day is that. But when I see moves like this in breadth, where breadth moves to an extreme in a day, that's power. So there's more to be taken away from the interpretation of fast movement, looking at historically. Look, if you were then to look at decades of information with this market internal, when it moves fast in 1 or 2 days from one extreme to another, that's power.
And then you expect, higher low. Yep.
Well, I expect continuation based on that power. However it forms on the daily chart, the expectation is whether it's a higher low or a W, or even more so, a consolidation like this, which says buyers step up and create support even after the run. So, Alex, what do you use as bands for sentiment? No, Alex, actually, I guess you missed it. I dropped the formula into the chat yesterday because you had asked me. So I will get it for you again because it's in an old presentation. And since I just look at the bands day to day, I've actually forgotten, but I think it's a 10% and a 20% envelope, not Bollinger Bands, around a 100-day moving average. And then this is a 5 MA of this closing value. But I will confirm that for you. But 10% and 20% around a 100-day moving average of this information.
Now, Greg, your competitors would have sold that for $249 and come up with some proprietary name.
Hey, you know what? Welcome to it. I'm sure they need it. Yeah.
Well, they'll probably take your exact formula and do that.
Somebody said, this is funny. Somebody messages me in Messenger yesterday. So a fella actually from India, very nice guy who bought the full options course and MTS and so on. And he says, "Hey, Greg," he said, "I was listening to this guy's webinar the other day and he's talking like you. Do you know this guy?" I'm like, "Yes, he worked for me. He was a student." And he says, "And there was another guy over at this other one." He said, "And he sounded like that." I said, "Yes, he worked for me too. And he was a student." It's like, okay, it's great that these, people that were students, they eventually, worked in some capacity. And then they went on their own, or they went to work for somebody. And that's a testament to the education that they got. Yep. All right, let's continue so Dan can review. Bonds, bouncing off of support. Prior low, makes sense. So bonds bouncing off a little bit there. Oil looks great. And the wide range bar right up into the resistance. I mean, look, support and resistance is so simple about looking to the left and swing highs and lows. And if you just forget all the BS about fibs and lines, trend lines and all that, it becomes simple, right? The wide range bar, top of the 50% area, is consolidating here. as long as it doesn't go past 50%. And of course, down here, this suggests it's going higher, which suggests that this should eventually be able to work itself out, moving to the upside. And we've got XES to consider, which might look better.
So Greg, Tasty Trade is recommending shorting XOP. What do you think of that?
You know what? I am thoroughly impressed that an organization with such terrible ability to pick profitable trades could build such a wonderful business. And it reminds me, and I've told you this in the past, Dan, my father-in-law had these sayings that whenever he said to me, in my first business, he gave me his advice. And he said, Greg, something that one of my mentors taught me. And the advice was, a good line of bullshit was worth 2 tool bags. And Tasty Trade should post that because they have good stuff. I shouldn't say BS, as far as their statistics and all that, it's interesting. But when they put it into practice, it doesn't make sense. Anyway, Dan, take it away.
All right. All right, I'm not going to go over everything because we're a little short on time. I'll just focus on any possible problem children. Yeah, so let's see, scanning here, I'll just talk out loud a couple of them. UTX, Iron Condor up a little bit, we're fine. Papa, ACN up $1.64, that's good. Gulf Delta, put spread fine. JEC, we did into the close. We have a Qs and Spider put spread, obviously both doing great. JWN, Sienna down a little bit here, which is showing relative weakness. Not much volume, but we have a covered call. Apple's, up again. We still have a put spread on that for Friday. Everything looks fine. Hey, our FTV up nicely for a little, well, if that's real, light volume. But yeah, no problem, children. SON showing down, but no volume. I got that. Let's go right to a couple of gappers, which I don't have many today. But this one I posted in Facebook group that I liked. I saw a gap up to 26 this morning, so I posted it. Look at 26 here. Look at the weekly. Look at the monthly, higher low. But now it looks like it's running without us. So I don't know what to do with it. Yeah, transports here look great. We're in them in our ETF trader, but they look great. Kroger had earnings or lack thereof, I guess. 28.70, very bearish. I don't know what to do with that big old gap. We'll come back to it. Papa India, let's see, 25.74, way the heck up here. I don't know what to do with that. Caesar's Palace was up. So yes, when I saw them earlier today, I'm like, whoa, $11, you're gapping up here. And I like the weekly engulfing higher low. Not a great price void though, but now it's giving it all up, so no interest. Allstate, that's just one of the insurance companies. From the hurricane, there's the XOP we were talking about. Now, if you said, hey, Dan, what do you think could be a trade here? We talked about a put spread 2 days ago, but there wasn't enough juice for me. But now I would say, well, there's a lot of resistance above, nice support below. I would never recommend a bearish debit put spread like Tasty did, but I'd say,